How can you invest and make money in today's real estate market? Welcome to the Successful Investor Show, where we talk with successful real estate investors, business owners, and busy professionals on their journey to wealth. They share their best ways and advice to make massive gains in today's market. Make sure you are subscribed so you never miss an episode. Now, here is your host, Doron Nissim.
Welcome everyone to the Successful Investor Show, where we talk about how to passively invest and create generational wealth in real estate. I'm your host, Doron Nissim. I've been investing in real estate for the last 15 years. And today I have the pleasure to have our guest, Vijay Patel. Hi Vijay, how are you doing?
Good, how are you doing?
I'm great.
Thank you for having me.
Great having you here. Yes, Vijay has been a serial entrepreneur and remarkable record in the real estate and business. He's been investing in more than $1,700 multifamily. He's investing in self-storage, notes, and he's right now creating experience-based resorts, which is a very exciting thing that I want to hear about. He founded the Future Group. It's a vision to create long-lasting legacy for creating passive income for real estate investors. So I want to hear about that. So we concentrate on emerging markets, potential markets, markets that have the potential to 10x your investments. So let's hear you, Vijay. I want to hear your story.
Sure. So let me just give you my brief background. Like my personal background is in medical. I have a doctorate degree, but I never practiced. Like I took up my first job. I used to live in New York. So from 2010 to 2013, that was my first job. I used to live in Brooklyn, and I got my first job. And like the long story short is I never got a chance to practice. Like the employer I used to work, in 6 months he promoted into management. And ever since, I've been into healthcare management. Like most of my career has been into healthcare management, like managing hospitals, nursing homes, senior living, community hospitals, any short-term, long-term, like skill rehab, anything and everything, But the interesting story is the employer I used to work for, he used to buy all the rundown nursing homes, assisted living hospitals in upstate New York because he had a big money. And then it was my job, and like there was a nurse, we both had to figure it out because he was non-medical. So we go in, and I'm personally like a numbers guy. So we go in and we fix it, like, whether it's a management issues, whether it's a financial issues, they're like mismanaging the financials, the revenues are not up to what it was. There was a compliance issues because, it's a healthcare. So there's a lot of compliance that has to be followed. Otherwise, government will come and, shut you down. So what we used to do is we used to buy non-performing assets, make them performing, and then sell it. And like after almost 10 years, I realized people talk about value add, but that's what we used to do in healthcare. So that was my first exposure as a value add, like, how you do value add into, something that is baseline, right? But then, then I decided to move to Dallas because of personal reasons. I just wanted to settle down in my life. I was getting married, and with a long vision in my mind, New York wasn't the right fit, like as a city. So I just moved back to Dallas in 2012 and started doing healthcare business flip. So I still do it. Like, I still buy rundown healthcare businesses because personally, they're like, it's a like billion-dollar industry, but it is one of the worstly managed industry till today. So very, very poorly managed. There's a lot of money, but it's very like people are just flushing those money into the toilet. Like, even governments are handing over billions of dollars and the hospital still goes out of business. So it's just a case of pure mismanagement and, lack of transparency and things like that. Just higher management is getting greedy enough that they don't care about, the employees and other stuff. So I used to do that when I came back here. I started buying like healthcare businesses, home healthcare. some outpatient clinic. Uh, and my like in 2016-17 period, my dad wanted to retire. So he is a diamond dealer, and he did he has been in diamond industries for 55 plus years.
Oh,
So he wanted to retire in 2016, and me and my brother took over his business. So I still oversee sales, and we only do B2B. We don't sell it to consumer. So we supply to the retailers, and we have manufacturing units in India, and then retailers makes the jewelry and sells to the customer. And we have an office here in Dallas. It's called MNP Wholesale. So did that for 2 years, and like my expertise over the period I grew is coming on board, fixing the numbers, and putting system and people in place. So over the period of time, like I became good at doing it. I did it for smaller scale, but then I've been like almost part of like 15 like big or small businesses. But that's what I've done. Like I go in and I try to fix the process first, and then try to fix people. If somebody needs to be hired, somebody needs to be fired,
wow,
and put the right people on place, and business will run itself. And I literally run two of my businesses just from my phone.
wow,
Like I can watch in cameras, they give me updates, I get emails, but I literally only have to go to write checks for the payroll. That's it. I don't even show up to their office. So
wow.
it requires a lot of automation and a lot of experience. And during that time, like I started investing in real estate. So in 2018, when my father's business was settled down, and I started having more free time for myself, and that's where real estate is something I always wanted to do it, but for some way or the other, I was just not doing it. But then I came across the concept of value addition, and that was just a basically aha moment for me, because I've been doing that for same thing for last 15 years, just a different industry, but it's the same thing. You fix the property, you just make like increase the occupancy, you increase the numbers. That's it. Like that's all you do. Like whether it's multifamily, you take RV parks, any real estate, it's a hotel, motel. That's the bottom line, is like you improve the basic experience, you improve the process, you improve the people, and that's it. Like your value is added, and you can flip the property and make some more profit and sell it and move on to the next one, right?
Hmm.
So that's a kind of a long story short version of my journey. But
Wow.
yeah, there are a lot of learning lessons down the road. It's not like, oh, I'm 100%, but I learned from my mistakes, and not try to repeat it, right?
Right.
So over the period of time, it just gives you a confidence, and backed by experience, which really helps you to scale your businesses.
Yeah. Wow, that's a great story. I love that you started as basically as an employee. They promoted you to a manager, and you oversee all the acquisitions of healthcare businesses. And then after you mastered basically the business of healthcare and how to get into mismanaged property and get it up and running and then resell it, you actually went to Dallas and you started your own business. But I wanted to ask you something. When you moved to Dallas, you said that you started to do it yourself. So you were on the business side, or you were also buying the real estate? You were doing
uh,
both?
we were doing both.
Okay. And you were doing it by yourself or with the company?
So initially, like I had partners, and like that's also like a kind of a story of itself. So the first syndication deal I did, and we had 40 people as partners,
Wow.
like 40. So like of course you learn from it. Like you don't want like too many cooks in the kitchen, right? So uh those things I learned. So second deal, we ended up having 12 people, and then started narrowing it down. And now my preference is I only work with like 4 to 5 guys max, including
Mhm.
myself, that has it's like a good size value to add, and with different experience. So like right now I try to save myself is finding a deal or finding a capital.
Mhm.
So I'm just trying to refine my skills into those two areas. I never want to be boots on the ground, so I always looking for a guy who's going to be boots on the ground. It doesn't mean that I don't have experience. Of course I do have experience of how to be boots on the ground and how to do even ground up constructions, but that is something I just don't want to do it. So
Right.
I always find a person who's gonna who likes that part of puzzle, and some other guys who are expertise in finding cheap money, when
Mm-hmm.
it comes to lending, uh, just have be more creative, or somebody has a big net worth, right? So those people will definitely add value to the deal.
I got you. Yeah, I love that. That you always look for partners that had the value add, basically, and they can help structure the deal, operate the deal, make sure the deal works and makes money. So,
Yes.
I mean, you've been doing that for a long time. You've been doing a lot of different things, notes, RV parks, resorts, healthcare businesses. So, is there a specific deal that was like the most successful deal that you did?
So there are a couple of deals, but the so far the jackpot I had was one of the nursing homes in upstate New York. So there was a rundown nursing home in upstate New York, which was poorly managed for almost 20 years. The state, almost state came in and shut it down twice.
Wow.
So we bought that property for $2 million, and it was even like the real estate itself was appraised for $8 million, just real
Wow.
estate component of it. But the guy was so fed up, and they were just tired of doing that particular business, so they just wanted to get out. Otherwise they will just go bankrupt, kind of a thing. So we bought it for $2 million, and it took us almost 1.5 year, and we invested almost another $2 million to fix it and improve it in general, right? So total $4 million, and we sell it for $47 million.
Oh my God. Talk
Because it
about
has,
big
yeah,
numbers. Wow.
yeah, yeah,
Wow. Wow. That's 10x.
yeah,
That's 10x
exactly.
returns.
Then the other
Amazing.
property that we did was of course, I was a minority partner, but that transaction was, it's here in Dallas. You can still see the property. It's called Windsor Garden Senior Living. So it was a Marriott initially. So the original guy bought it a Marriott for $6 million. It's sitting right on the 635, and then he did close to $2 million of rehab, and was $8 million, right?
Hmm.
But then what he did was he make an exclusive luxury senior living out of it. So if you don't know, senior living is basically only 55 plus people are allowed to live in those communities. And Dallas has some good money, especially oil money. So it's very close to downtown, just 10 minutes from downtown. So he started marketing wealthy people and started charging almost 15,000 for 700 square feet studio apartment. So you just have to provide three times of meals, and plus basic attendance, somebody to help them with the bathing, dressing if they need something, light housekeeping. But like so the ultimate business plan was to create a luxury senior living. So it's reserved for top 10 or 1%, I would say, because 15,000 a month is too much money.
Wow. Yeah.
And even just to qualify it, you have to have $1 million cash in your bank account, that kind of a thing. But eventually, it took us 4 years, and the property was sold for $300 million
Wow.
to a New York venture capital. And again, I was a minority partner. I wasn't the major owner, but that was one of the successful transactions we have done so far.
Wow. So they bought it for 6 million, 6.8, you said, I think.
Yes,
And
yes,
then they put another 2 million in the property and they operated for 4 years.
yep,
Which those 4 years, I guess, yeah, they made some money on the operations and things like that, and then they sold it for 300 million.
yes,
Wow, amazing,
yep.
I mean, and I think that's the opportunity that people don't understand in the healthcare, not in healthcare, but in the assisted living facilities. There is a huge opportunity in that, but people are very afraid of the operations, I mean, all the requirements that you need to have, state requirements, things like that. So they try to stay away from that.
But it's good and bad, because see, that's one of the problems we are having in multifamily is there are too many people's fighting for the deal.
Right.
Like, too many people are getting like those online courses and then
Mm-hmm.
just throwing out the offer. Like,
Right.
recently I lost a very good deal because, like, the property was listed for $32 million. We offered him $30 million, and then in a week somebody came by and offered him $40 million.
Wow.
So of course we don't want to pay that kind of money, so we just let it go. But the moral of the story is, like, that guy never was able to raise that kind of money because he was overpaying it. So he just wasted 1 year of the seller's time,
Wow.
and plus lost like $1 million in earnest money
Oh my
from
God.
partners, because he couldn't close the deal. Even the bank was not ready to lend because the appreciation was like, the purchase price is
Right.
too.
Wow. Wow. So I wanted to ask you, I mean, we talked about the most successful deals you had. Now I want to hear if you had a bad deal and
Yeah, of course. Like, everybody,
what we can learn from that.
everybody has a bad deals, and, like, the example that I tell you is like 40 people in one GP, right? So, like, I didn't even find out, like the way it was structured is like, okay, it was a friend of friend. He approached me saying, okay, like, here's a deal here in Dallas, and there are four guys already in the deal, and like, do you want to be part of it? I was like, okay, I like the property. I didn't like, I was very naive, or very new to the syndication part of it. So I was like, okay, four people. I didn't did much focus on the partnership. I was more focused on the property side. So I
Right.
did my due diligence. I did my all the research on the property, and property makes sense. It was a good property. I was like, okay, then I'll be the part of it. But then after I became part of it, I found out that those four people had a subgroup of six people inside it. And then they added one more partner. So basically, five people has 6 to 8 people of subgroups.
Wow.
So eventually it became like 40 people as a GP.
Wow. That's
And then,
crazy.
like, it was just so hard to convince everybody, or getting on a same level of thinking that, okay, like, do you want to really hold it, or you want to sell it, like, if the time is right. So, like, it will be always split in 50-50. Like, so 50% wants to hold it, 50% wants to sell it because they want their money back earlier.
Mm-hmm.
But at the time, what I learned is, like, we could have made like $2 million more
Mm-hmm.
if we could have hold the property, but we just had to sell it because it was just too much of a headache to deal with.
Wow. So how much money did each one of the investors, the partners invested in the deal?
So the way they structure is like each partner had to come up with $250,000, right? But then they subdivided that into $50,000.
Oh.
So
So each
yeah,
GP was supposed to bring 250, but then he brought another five investors that each one brought 50. Instead
yes,
of doing it as an LP, a limited partner
yes,
that doesn't do anything, just passive, they structured as a GP, as a general partner
yes,
that takes all the decisions and make all the decisions.
yep.
Wow. Very complicated way to do the deal.
Yes. So, like, like, those are the things you learn down the road, and,
Right.
like,
Yeah.
you just learn from it.
It all comes with experience.
Yes.
Definitely. So, in today's market, everybody's talking about recession, banks are collapsing, things like that, and people are very scared. They're actually taking money out of banks, out of the market. And I wanted to ask you if there something that you do to mitigate risk when you look at the properties, when you invest? What do you do in your business?
So, my number one rule is, like, and that has been from childhood, is if everybody's doing, I'm not doing.
Okay.
So that's why I told you initially, like I'm doing everything right now apart from multifamily,
Right.
just because there are a lot of people involved in multifamily. Like it's not like they shouldn't, like they're not, like they don't belong to that,
Hmm.
but they still need to have that experience under the belt before they can start uh like lifting heavy properties. Like
Right.
you need to, like play under 100 units before you can start going out and start buying 500, 600. Yeah, there was a recent default. There was a guy in Houston, I don't know if you know, he defaulted on 3,000 units.
Wow.
Yeah.
I didn't hear that story. Can you tell us the story?
Yeah, so basically, like, he grew out of nowhere in 2 years. He was owning 3,000 plus units. And just this month, his company defaulted. And now everything is under foreclosure, like all the properties.
Wow. 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 And that's because I guess he bought it in the 2019, 20 or 21 when the values were going up, everything was great, interest rate were super low. And now because everything went up, interest rate went up, it's just, it goes crazy.
Yeah,
Yeah.
but he bought it with a lot of leverage. Like
Right.
he almost all his property had a bridge loan, and bridge loan with no cap of interest rate. So
Wow.
it can go as high as the market can be. So those things you always want to make sure. Like if you're experienced enough, interest rate is something you always want to control. If
Of
you have a
course.
choice of buying it, like sometimes lender will sell you that option that you can cap out.
Hmm.
You
Yeah.
always want to secure it because you don't want to be in an uncertain market where your loss can be unlimited.
Yeah, so that's a great point that I wanna repeat. When you go into a property and you're taking a leverage, you're taking debt on the property, you always want to make sure there is a cap on the
Yes.
interest rate, and never let the lender just go over and do whatever they want. I mean, you have to
Yep.
make sure that you're taking that as to a note.
Yep.
Yeah. All
Because in
right.
Texas, there's there's something called Wild West, and you never want to be part of Wild West. That's crazy.
Right, right, right. Definitely. All right, so we're going to move to the final round of 4 success questions, and it's going to help our viewers to be more successful. So the
Sure.
first one that I have for you is, what are your 3 best success habits in your life or in your business that you have?
Hard work, be honest, and don't be greedy.
All right. Yeah, I love those. Hard work, definitely. You have to work harder than anybody else to be more successful. Yeah, don't be greedy, because if you're greedy, you usually lose.
Yep.
And
Be
yeah,
honest.
and be honest, that's definitely because I mean, people go if they like you, if they trust you. So, I mean, always be honest with your clients, with the people.
My way of dealing is like if let's say you are the seller and I'm the buyer for any company or any real estate, right? I want you to see like a happy face when we close the deal.
Right.
Like I don't want you to get up with sad face that this guy ripped me off. Because if I do
Definitely.
that, like down the road, I feel that that it's just gonna pay back.
He will come back definitely. And the real estate, I mean, everybody's doing real estate, or everybody is into real estate, but it's a small market, and things go out, names go out, and you always want to keep your name
Yeah.
straight, your name right. Yeah. So the next question I have for you is, what is a good resource that you use in your business to be more successful?
Like like networking, I would say.
Networking. Mm-hmm.
Experience is not something that you can learn from books. Of course, you can read books, but you have to dive yourself into water to in order to swim. Like you can't be learning swimming just by reading books, right? You can
Right.
learn the basics of it, but you can only be pro at it by swimming in the water.
By
So that's
practicing.
yeah, that's what I would say. Like I try to be in the game. I like to be around the game, around the people who are in the game. So I always like at least learn from that.
Right. Yeah. Networking is is big. And usually people that I bring here on the show, they always say networking, 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 because it's like I would say it's like an escalator to your business. If you don't do networking, you can go up the stairs. It's going to take you some time, but if you do networking, it's like jumpstart your business so much, and you learn from people, and you get to enjoy their network. And yeah, I mean, always
Like
network.
invest in a relationship. For you, for me personally, I always invest in relationship. So because you know that you can call this guy and ask for a favor,
Right,
if needed, right? So it's all about that. Like like if he's in the business, if you are in the business, there is going to be a time where he's going to need your help and you're going to need his help.
exactly.
So always try to have that relationship. There, like, you can do networking two ways. Personally, I prefer one-on-one networking more than crowd networking, because
Right.
crowd networking, you're just shaking hands and collecting cards, but that doesn't mean any transaction value.
Mm-hmm.
But just follow a couple of people like intrigues you, and then just try to have an interaction with them, and
Right.
then see if you can build a relationship with them. Like, and personally I learned is like, there's a lot of phobia around it, that, oh, if I'm the small guy in the room, how the big guy is going to perceive. Of course, there are people who's going to be rude to you, but in general, what I have found is, like, even successful people, like, you will find nice successful people who's going to spend like hours with you just to go through or go over with you their
Right.
learning lessons. I still have one of my mentor. That's how we met. Like, we just met like with the initial acquaintance, and he manages almost $1.2 billion in asset under management
Wow.
company. And like, he has a very good relation with Dutch bank and everything, but very senior to me. And uh like, till today, yeah, I know he's the busiest guy, like even busier than me for sure, but he still like make sure that if I'm there, he allows me to ask whatever doubts I have or questions I have, and until I get satisfied, or he's gonna
Wow.
just teach me some lessons that he learned in his career.
Wow. And that's all from building relationship with these people, and
Yes, yes,
actually also giving them some value. I mean, you always can, even if you don't know as much as they do, but you always can give more value to
yeah,
these
yeah,
people.
yeah.
So yeah. So the next one that I have for you, what is three tips that you have for people to make money today in real estate?
First of all, is a financial education. That's the bottom line of anything. Like, not necessarily you do real estate, you can do anything and everything, but for one thing is a must, is a financial literacy and financial education. And learn the importance of financial freedom. Like, life has a much more meaning than just trading that dollar for an hour,
Right.
or chasing dollar for that particular thing. But you will only realize after you hit to certain level. Like, when I was starting, and when you hear those kind of speech, I don't get it. Like, of course, it sounds like very, like, what do you call, like Disney kind of thing, right?
Right.
That, like, like, he's just
Cliche.
saying, but
Yes.
it doesn't apply in a practical world, but
Mm-hmm.
it does. And you will only realize once you hit to that comfort level of money, that like, money is just a vehicle. It does nothing more than that. At the end, your family, friends, and the people around you matters the most, and
Right.
you should be taking care of that.
Right. Yeah, definitely. Financial education, financial literacy, knowing the words, knowing what's going on is very important.
Yep.
Um, so the next one, and actually the last question I have for you for today, for people that has a full-time job and they want to invest in real estate, or they want to do something in real estate, what can they do today?
Learn, like, start with passive investing. That's what even I did. That's what
Mm-hmm.
I Nobody's going to open up their book if you're not invested in the deal. Like, I'm not going to open books for public. Like,
Right.
it's only allowed like people who are invested in the deal. So try to invest in a couple of deals that you feel confident, and then that is a chance to learn from the pros.
Mm-hmm.
Like, that is a chance that they will allow you to get closer to them, open their books, and they will literally, most of the time, will sit down or have a Zoom call breaking down all the numbers that, okay, this is how we are going to do it, this is how we do it, or this is how we have done it. Like this is the time frame, this is the improvements, why these improvements are important, right? Like what implication it has, like basic, like installing cameras, why it's important, like you have to know the meaning of what you are doing and why you are doing.
Mm-hmm.
Like once you go behind the mindset of that, then you learn a lot of things.
Right. So I love that you said that you first, by passive investing with somebody that has the experience, has been doing it for a while, and he has a track record, a success record, you can trust them. And then when you invest in their deal, they can open their book and show you everything what they do. And basically you'll learn for free from them by
Yes.
investing in their deal and actually getting money in return. And
Yep.
you're learning everything, and then you can go and do it yourself if you want, or keep investing with other people.
Yep.
Yeah, I love that. All right, so that was a great show, a great episode. I got a lot of value from you, and I'm sure our viewers will get a lot of value from this episode. Now, if people want to get in touch with you and invest in your deals, or learn more about you, how can they reach out to you?
So like connect me in a social media, like you just search it like a Vijay Patel on LinkedIn or Facebook. Connect with me so that you can get updated of what we are doing. And like just go to my website, thefuturegp.com, and like we are giving away like a free ebook, which is like related to financial freedom. But once you click on that, it will lead to a investor form that you can fill out. And once you fill out an investor form, then you go to our database, and then like all the deals we have, we get you updated of whatever we're doing. And just I'll take 2 minutes, is the resort there that we are working on. We are so basically what we want to do is we want to build a resort, giving you the experience of a culture. So just to give you example, is like Indian culture or Japanese culture or Chinese culture, right? So we want to have a resort full blown based on, so basically you can feel like that you have been transported to Japan for that
Wow.
particular night, right? And you can enjoy the hospitality of Japan, culture, colors, food, and like you can enjoy without like traveling for 12 hours or 14-hour flight, and you can still come back to your real life in a weekend.
Wow, I love that idea. I love that. And when can we go and stay in your resort?
So right now we are still shortlisting properties. It's still very early phase, but like anybody that I'm talking to, everybody is liking it, and everybody's like super excited.
Right.
So it will be like a reality pretty soon. I would say in 2 years.
Wow. Wow. Awesome. That's very exciting, and I love the idea, and I'm sure it's going to be very successful. Thank you so much, Vijay. I loved having you here.
Yes, thank you so much.
Thank you.
Thank you so much for listening to this episode of the Successful Investor Show. If you're enjoying this podcast, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we greatly appreciate it. Once again, thank you for tuning in, and we hope you'll join us on the next episode of the Successful Investor Show.